fill in RSI. Click on the first indicator and close the screen. You will now see the indicator appear at the bottom of the screen. We keep the RSI at the default settings. We do remove the yellow line. This is not necessary. Double click on the RSI and then press the RSI based mode. Then close the screen. The RSI is now clear. The RSI line moves between 0 and 100. The standard expectation of the RSI is that when the RSI line crosses the 70 level, the price will drop again. When the RSI line drops below the 30 level, the price will rise again. However, this is often not true at all. We will have to look deeper into the RSI to see what it's telling us before we can open a position. We will therefore look for a divergence. In short, a divergence is a movement on the RSI which is the opposite of the movement of the price. Here we see a nice example of this. The RSI makes a lower movement at the second top while the price makes a higher movement at the second top. This is a divergence. Actually, the RSI here indicates in advance that the momentum in the market is dropping while people are still buying in. So a divergence like this really indicates that the market may be going down. We will see this happen later as well. Suppose you as a trader had sold a position immediately after the price rose above the 70 level. You would have made a loss because the market would have risen even further. If in this case you had waited for a divergence, you would have made a profit with a short position because the market was now falling. But before we can actually open a position, we are waiting for a breakout. With a breakout, we can be sure that the market will rise or fall. In this example, you saw a breakout below the trend line. So after seeing the divergence and the breakout below the trend line, we could open a short position with which we would have made a profit. In a rising market, of course, it also works. Now in a rising market, we are waiting for the RSI drop below the 30 level. We see that happening here. As you know by now, we are not opening a position directly. We first wait for a divergence. Here we clearly see a divergence because the RSI is high in the second bottom while the price is lower in the second bottom. So this indicates that the momentum of the market will change. The only thing we are waiting for now as a second confirmation is a breakout. Again, we can draw a trend line where we see the price breakout. From after the price breaks out, we can open a position. Also, here we can conclude that you would have made a loss if you had immediately bought a position when the RSI dropped below the 30 level. So it's important to always wait for a divergence and a breakout. The beauty of this strategy is that it can be applied to any time frame. I'm now on the 5-minute time frame, but you can also use the 1-hour time frame or even 4-hour time frame. This makes it convenient to execute the strategy while working or studying. Don't you have a place where you trade crypto yet? Then I can recommend you Uebert. Our analysts also trade on this exchange and use more than 100 cryptos in which they can trade. You can trade easily and safely from your laptop or cell phone. You can also take advantage of a 4-price layout. Currently, Uebert is giving away a big bonus up to $3,000 for your first sign up. Do you want to trade on this exchange? Visit via the link in the description. We use a made tutorial. You can find it in the description as well. All trading, always keep in mind that non-position will be the same. A divergence will be bigger one time than another time. Also, a breakout will not always look the same. That's why it's important that you learn a lot and practice this strategy often. I will show you another example of opening a position that is less obvious than most positions. Here on the price, we see that the RSI is rising over the 70 level. We are therefore now waiting for a divergence. About 30 minutes later, this divergence takes place. You can see that this divergence is fairly small. Nevertheless, we can now wait for a breakout as the momentum is expiring. Here we can once again draw a trend line, which is then broken through. We now open a position with a risk-reward ratio of 2. To do this, we set our stop loss above the last stop and then drag our target towards a 2. This means that we now earn back our stop loss twice. On the same day, we saw another divergence. The price made a higher top while the RSI itself made a lower top as it rose above the 70 level. So at this point we could wait for a breakout. Again, this was a trend line breakout, after which we could open their position. We again placed the stop loss above the last stop and dragged our target to a risk reward ratio of 2. Again, this gave us a nice profit in total. With 2 positions we earned 4 times our losses. So suppose you wanted to lose $100 on a stop loss, you would have made $400 with these 2 positions. While trading crypto, it's always important to perform a good risk management. Make sure that you always earn more on a profitable position that you lose on a stop loss. So in this strategy we use a 2 risk reward ratio. So we earn twice as much on a profitable position than we lose on a stop loss. This ensures that we don't have to have every position right, and we can still be profitable at the end of the month.